Hi everybody, welcome to what we're going to call a mid-year check-in, right?
Yep.
That was the excuse that we gave ourselves for doing another video, was to check in with everybody, middle of the year, talk about some things that you might want to be thinking about as we enter the third quarter of the year from a tax, business, cash flow planning perspective, right?
Right.
Okay. So what should we cover first?
Well, at the beginning of the year, we're always setting goals for the year. And so we thought that mid-year would be a good time for everybody to just sort of pause and check in on, is your income where you think it should be
Right.
for the year?
Well, because let's say that it's not. If your income's not where you were thinking it would be for the year, and we're talking about income taxes.
Right.
You may want to revisit things like, if you are on salary, revisit your withholding.
Right.
If you're not, think about your estimated tax payments.
Right.
Right?
Right.
All of which seems pretty obvious and automatic, and hopefully it is stuff that anybody watching this has under control. But if you haven't stopped to think about it, you need to stop and think about it.
Right.
Okay?
Right. And then along the same lines, thinking about deductions and contributions to plans that have annual limits, things like
Right.
401ks, IRAs, HSAs,
Yep.
any of the A's
All
that
the
have
A's. I was really beat me by 1 second. I was about to make
that have annual limits. Just sort of check and see where you are,
Right.
and see if you need to increase or stop.
Yeah.
If you've hit the limit, then
Right.
you don't. Sometimes you can be penalized for over contributing to some
Gotcha.
of those accounts.
Right, and this stuff all overlaps, right? Because if you're thinking about making a change to that could affect, again, your obviously your income tax position. It might affect what you're wanting to do in terms of withholding for the rest of the year, estimated tax payments for the rest of the year.
Right.
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 Okay. Other thing that comes to mind, I don't know if it's the next thing on your list, but charitable giving. Right. I mean, I know
Right.
it's something. There does seem to be a rash of folks sort of dealing with charitable giving in December. It's the end of the
Right.
year. I've got to write a check to this charity, or to that church, some organization. You don't have to wait until December to do it.
Right, right. I think a lot of people do sort of review what they've given over the year
Right.
at the end of the year.
Yeah.
But mid-year is a good time to look at that too. In addition to charitable giving, just giving in general, the annual gift exclusion.
Right.
Another annual exclusion to sort of just pause and think about where you are.
Right, because that annual exclusion, it is just that. It's, you can give up to that amount, and I know we could talk about splitting it, et cetera.
Right.
And it's, in terms of using up your lifetime exemption, it's a freebie.
Right.
Every year.
Right.
So if you are going to be giving, you want to use that every year, because it's use it or lose it.
That's right. That's right.
Okay. So what else? Again, I don't want to get this out of order, but something that does come to mind that we shared a post on social media recently about this. We're talking about income. If you own a business, work independently, or don't get reimbursed for say business expenses, and you qualify as sort of your own business person, business mileage, because gas prices being what they are, and this is what we posted recently, the IRS has adjusted the business mileage and the medical deduction mileage rates upward.
Right.
Right.
Right. And this is significant because they sort of stepped in to make this change because of the rising gas prices.
Right.
They don't typically change the mileage rate mid-year. So this is news.
Yeah, and it is effective July 1. Is absolutely a mid-year change.
Right. And so the business miles are 62.5 cents per
Right,
mile.
and that's up from, I forget what it has been, but it's in the 50s.
Right.
So that's a pretty significant increase.
Right. And then the medical miles are 22 cents per mile.
Right.
Charitable mileage remains the same.
Okay.
That one was not adjusted.
Got it. So, as we said in our social media post, which you can find on all of our various channels, Facebook, LinkedIn, Instagram, there are requirements, as I very haltingly referred to earlier. There are rules as to whether you can qualify to take a deduction for business mileage. There are record-keeping requirements and best practices. So you need to talk to your tax advisor about that. And there are rules for medical deductions as well, including mileage. So talk to your tax advisor about that. But if you do qualify and you can take one or both of those deductions, it is something of a help in this world of high and potentially rising gas prices.
Yes.
Right?
Yes.
Okay. So that's, again, just something to keep in mind as you are doing sort of a mid-year physical of where you are and where you may be the rest of the year.
Right.
What else? What else we got?
The other thing we may want to mention is capital gains and losses.
Well, yeah. I'd rather not talk about them. Kind of like gas prices. I don't want to talk about this.
Just with the market volatility being what it is, something to review is your portfolio.
Right.
Are you looking at losses for the year? Do you have losses carrying over from last year into this year?
Right.
And what kind of planning can you do before the end of the year for 2022? Right,
because there are limitations on how much of a net capital loss you can take in a year. Many people don't have a lot of gains that they can take right now, but we're mid-year, so again, you still got 6 months left to plan. Certainly, you never want to make an investment decision either to invest or to get out of an investment purely for tax reasons, but that is one facet of what you may want to be looking at as you're determining what you're in that you may want to get out of, what you've already gotten out of. Are you in a gain position? Are you in a loss position? Because again, there are rules as to what you can take in a year in terms of net losses, and the rates. Something we were talking about last year quite a bit. The world was a very different place in a lot of ways. Early to mid last year, we talked about the potential for rates changing for capital gains. That didn't happen. And I'm not a political expert, but I would say that the chances of anything happening this year with income tax rates on capital gains is very, very close to zero. Yeah. So those rates all remain the same. There's still there is still preferential rate treatment for qualifying capital gains. Right.
And that is one thing that we talked a lot about last year because of all of the proposed changes that really sort of just disappeared.
Yeah, that's all the political commentary you're gonna get out of us.
Right.
So, anything else specific that you can think of?
No, I think we hit all the really specific points.
Okay. We do, as things happen, anybody who follows our various channels knows that as significant things happen, we do try to put out something on them as we get some sort of definitive guidance. We have had some things recently at a state level. We've shared some stuff about that. So as we're talking about reviewing your position mid-year, thinking about federal taxes is obviously the bigger piece of that pie mathematically, but also think about where you stand from potentially a state income tax perspective. Again, there's been, if you are a Mississippi taxpayer, there's been a significant change recently, which we talked about. I think we even did a video on that.
About that.
In terms of that pass-through workaround for our state income taxes. So that might be something that, again, as part of the mid-year checkup, you want to talk to your advisor about that. That is something on which we are, last I checked, still waiting on guidance.
We are, and as soon as we receive guidance, we'll post
Right.
What that looks like and what that means to you.
Right. So I think that's pretty much it,
Yeah.
right?
Yeah.
As always, we appreciate everybody for watching our videos, for sharing our stuff, for commenting, for giving us feedback on what you'd like to see next. We may not be, at the moment, we're not doing these as often as we had done them. We're working on a number of things. If you've watched us on social media, you probably know some of what we're alluding to. We're working on some potential changes in venue for how these may be coming to you in the future. Maybe not immediately, but pretty soon.
Yep.
And that might change some of our format, but we're always looking for excuses to just share information. We love having live conversations with people, obviously more than anything else, but we do find that this is a way to share some general information without being able to sit down with everybody who watches these. But if you do see something that interests you, brings up a question, obviously talk to your tax advisor. Nothing we're sharing is specific tax advice, right? Always talk to your advisor, but if you either don't have an advisor or would like to talk to us specifically about something that you've seen us write or talk about in a video, then, I mean, we would probably be willing to have that conversation, right?
Most definitely.
Right. So, anything else?
Continue to follow us on social media. We are on Facebook, LinkedIn, Instagram, Twitter.
We haven't been tweeting a lot, but we're trying to get more active. If we see some more follows out there, that'll probably be a good incentive for us to tweet more.
Yeah.
Hasn't been much of a clamor for that, but we're trying to engage more on Twitter.
That's right.
So that's it. That's all I got.
Yeah.
Okay. All right. So we will come up. Well, we don't have any sort of a canned professional sign off, so we're just going to sign off. Say thanks for watching, and again, thanks for liking, sharing, giving us feedback. We really, really appreciate it. Appreciate everybody's support, and we are looking forward to doing more of these as we continue. Thanks and goodbye.